Dynamic support and resistance. Dynamic support and resistance are moving along with the price and can be identified using moving averages. Moving averages act as a support when the stock is moving up and act as a resistance when it is coming down. This is the Nifty 50 chart. I have added 20, 100 and 200 EMAs, and 20 is a very short term support, and 100 is a medium term support, and 200 is a long term support. If you see this chart, you can come to know how the current trend is going with the 20 EMA, and medium term trend is going with how it is behaving with 100 EMA, and the longer term trend how it is going we can come to know from this chart. And if it is taking support with the 100 and 200 EMA, how to trade, that we will see in the example. Moving averages. What is moving averages? Moving averages move the price data to form a trend following indicator. It means it is a lagging indicator because it is based on the past price movement. The longer the time period for the moving averages, the greater the lag. 200 EMA will much greater degree of lag than 20 EMA because it contains price for the past 200 days. What are the type of moving averages we have? Simple moving average, exponential moving average, and weighted moving average. Simple moving average. Simple moving average calculated by adding recent price closes and then dividing that by the number of time period in the calculation of the moving average. The formula is A1 plus A2 to n in n number by divided by n. N is the time which we keep in the setting. Exponential moving averages. Exponential moving average is a weighted average of the last n prices where the weighting decreases exponentially with each previous price and period. In other words, the formula gives the recent price more weight than the past price. This is the formula for the EMA, but we no need to memorize because the indicator itself we have in our every system. So we no need to memorize. We can directly use the indicator with preferred time period. Weighted moving average. Weighted moving average puts more weight on the recent data and less weight on the past data. This is done by multiplying each bar's price by weighting the factor. Again, we no need to memorize the formulas because since we have already indicator itself. So, but this is the formula. EMA is the uh, price 1 into the which time period we are using, and we are decreasing the price by and divided by the number of the time period. Every lowering the period, and we are lowering the time also here. So we use 20 EMA for the short term, 100 EMA for medium term, 200 or 225 EMA for longer term. I use 225 or 233 because 225 is the square number and 233 is the Fibonacci number. From now we use often WMA and EMA for our trades, and we will show you how we use this MAs in our strategies in the coming strategy session. So this is the dynamic support and resistance example for the resistance. So this is the Dow Jones hourly chart. If you notice again, the longer term 200 MA act as a strong resistance, and here in this area the 100 MA is act as a EMA acts as a strong resistance. So we can just follow through the EMA by taking the trades. So how do we enter the trade? We will go through the chart and I will explain you how to enter the trade. Let's look at the example. This is the Nifty 50 chart hourly. We just seen just before. How do we enter the trade? So in this hourly chart, the Nifty is came down and it is taken the support with the 200 EMA and it is moved up. There are two possibilities which I explained you in the previous session in static support and resistance. We can look for the strong green candle once the support is taken, and we can buy above the green candle in the same time frame, or else we can move to the lower time frame. Once the support is taken, we will identify the swing and we enter the high of the swing. So let's look at the look now. Just I mark once the support is taken this candle, and I am moving to 5-minute chart. So in the 5-minute chart, so here is the, so here what we do, we look for the, once the support is taken with this candle, we look for the swing. So what we do, as I said, 20 EMA is a short term. So what we do, we will look for the swing formation above the 20 EMA. Once the breakout comes, we enter the trade. What it means, in the lower time frame, we are looking for the double bottom. So what we do, we just mark the swing high. So we mark the swing high. So how do we enter the trade? In the swing, in the breakout concept, we look for the green candle close above the swing high. Then we enter the high of the breakout candle. So we enter the high of the breakout candle, or we can wait for the retest of the swing high. We can enter the trade here. But once you want to wait for the retracement, you first, we should have a confirmation that this candle high is broken. Okay, so here we enter the trade by using the lower time frame concept. So it is applicable for both 100 and 200 EMA. So in the short term, we just look for the trend, how the trend is following. Okay, in the longer term, we identify the support and we enter the trade using the lower time frame double bottom concept. And this is also applicable here. Again, we will look again this example. Okay, we just mark this red can. Okay, here what happened? There is a gap up opening. Okay, just again we will mark this. Okay, and we move to the 5-minute chart. So here what happened? Yes. So what we do? We look for the lower time frame swing high. So here is the swing formation. We buy above the high of the swing. We look for the double bottom. So here 20 above the 20 EMA. Here the breakout candle. We buy above the high of the candle here. Or we can wait for the retest of the 20 EMA. We can buy. Once the retest happen, we can buy above the high of the green candle here also. So, but as a concept, I'm telling this like this. You can also wait for the retracement of the 20 EMA and you can enter the trade above the high of the candle. And you can just follow through the trade until you have the lower low formation. See here, it is still not happened the lower low. So your trade is still continued here until here. Okay. So this is the way you can enter the trade using the EMAs. So we just go through another example for the resistance in the Reliance chart. This is the hourly Reliance and it is made a top around 2370 and the stock is falling. Once we have a pullback towards the 200 EMA, it is taking the resistance and it is coming down. How do we enter the trade? We just mark. Again, as I said, we can look for the strong red candle. We can enter the low of the red candle. So we should look for the red candles that should close below 200 EMA and we enter the low of the candle. This is the first concept, but I am not prefer with this. I will look for the lower time frame and enter the double top concept. Okay, so I will mark this candle. Now I am moving to the 5-minute chart. So in the 5-minute chart, I mark the same candle. Now what we look for the swing formation and we mark the low of the swing. So this is the swing. I mark the low of the swing. How do we enter the trade? We should need a confirmation that the candle should close below the low of the swing. So this red candle is closed below the low of the swing. How do we enter the trade? We enter the trade when the low of the breakout candle is broken. So this is our entry. We do enter here. Okay, our stop loss is just above the high of the uh, this red candle or the swing high. We will keep some buffer and we keep the stop loss and we continue the trade until we have a higher high formation. Okay, so this is the classical example for EMA resistance trades. And if you notice in the resistance, sorry, in the Reliance chart, here to 200 EMA act as a resistance, and here also it is closed above 200 EMA, but if you notice here, there is a failure breakout. So none of the candle is closed above the high of the candle, so it is a failure breakout or fake breakout, and the stock is fallen again. And here also, everywhere the fake breakouts or fake moves, pullback in the pullback. So we again look for the swing and we enter the trade in the lower time frame. So once here the trend is confirmed by making the higher high. So here the breakout is confirmed and we can enter the trade around 1975 and we got around 150 points move in the Reliance in the last week. Yeah, this is the way you use EMA to in your trades.